In studio today, our Squawk newsmaker, not normally the case, usually could be anywhere, Hong Kong, Thailand. Marc Faber is editor and publisher of the Gloom, Boom, and Doom Report. Marc, I want to just start where we were in Europe. The Euro region's combined debt burden, the numbers are out, surged today, the highest level ever, or at least since the Euro was introduced, 87.3% of GDP. That includes Greece as 170%. Of GDP. Italy and Portugal, 121% at Italy and 108% at Portugal. Now, the EU's debt to GDP limit, which they will strongly enforce, is 60%. So they have all these numbers that they have, but no one's in compliance with any of them.
No government complies with anything.
Especially, is this a representative of what the globe is facing? Is it similar to anything here in the U.S., or it's just Europe?
It's similar. It's a symptom of Western societies, democracies that have overspent, where essentially debt has grown on the private sector level and on the government sector excessively. And it always depends what you use debt for. I remember, for instance, in the 50s and 60s, South Korea had very high debts to GDP ratios because they invested a lot of money in plant and equipment and infrastructure. That's a different story from borrowing to spend, in other words, for consumption purposes. Borrowing for consumption purposes advances consumption to today, which would have taken place tomorrow anyways, sooner or later. And that debt burden on the private sector level, the household debt, once it becomes excessive, it cannot grow anymore. Nobody lends you money. And then automatically you have structurally weaker future growth.
I'm reading.
Normal.
So why did you say you're in the business now? I've quoted Tocqueville and Thomas Jefferson, and you are now too, and including Plutarch. This happened. This is all the way back. This long time ago, Andrew. This Plutarch dude. He says the abuse of buying and selling votes crept in, and money began to play an important part in determining elections. Later on, this process of corruption spread to the law courts and then to the army, and finally the republic was subjected to the rule of emperors. And then Thomas Jefferson, the issue today is the same as it has been throughout all of history, whether man shall be allowed to govern himself or be ruled by a small elite. Why did you decide to tell our pre-interviewer these two quotes?
Because history kind of repeats itself. In democracies, you start with good intentions, and then power becomes polarized among a few people, and eventually you have either huge changes occurring in a peaceful fashion through reforms, or usually through revolutions.
Where do you think we are in the U.S. here on this?
Well, we're not yet dead ahead of a revolution, but we're getting closer. We're moving into that direction. And the same in Europe. I think the regimes will try to keep the system alive as it is for as long as possible, which means there's no fiscal cliff. There's a fiscal Grand Canyon, never-ending deficits, because you have to feed the population with all kinds of hands out, whether you're Republican or whether you're a Democrat. And so the debt burden will continue to go up, and one day the system breaks.
So is that 5, 10, 15, 50 years?
Well, you're going to be dead by the time.
Well, I just want to know what we're talking about.
I think the time frame would be within 5 to 10 years you have a colossal mess.
Here or in Europe, or both?
Everywhere in the Western world. You see, we had an Asian crisis, 97, 98, which was devastating. Markets went down 90%, currencies collapsed, and there was no intervention by the new Keynesian. The system then deleveraged. The private sector tightened their belts, government spending was cut, and it was painful for a few years. But now we have essentially again a boom.
And you think your Rottweilers are going to be enough for you when this? How many do you have?
Well, I'm a peaceful person. The problem is our drones. Against drones, the Rottweilers are not very useful.
Do you have more than 3?
Yes.
How many do you have?
4.
Do they respond to German commands? I mean, can you give me a good German command? Can you say, what would you say to them if they don't listen to you?
No, if I tell them, shut up, then they shut up.
They do.
But,
if you tell me that, I will.
No, I'm not saying
all right, let's go.
To you, but I'm telling you, my Rottweilers are not
You're
model
fine.
dogs.
You're in your little Upper West. Everything's gonna be fine. Don't you worry. Even though you walk outside, and someone pushes you on the subway rail, but you're gonna be fine.
Mark, is there a plan though? Like, you're talking 5 to 10 years. This is some serious. I mean,
let's put it this way.
If you looked at a Simpson Bowles type plan, is that enough, or is there anything that can actually?
I think the deficit here, irrespective who is in the White House next year, will stay above $1 trillion per annum for at least as far as the eye can see. Equally, no matter whether Mr. Bernanke is the Fed chairman in a year's time or somebody else, they're going to be money printers, because actually the doves at the Fed, most of them, they make Mr. Bernanke look like a hawk.
Yeah, you were
like
early
a hawk.
You were early on QE 15, 16, and 17. You said that a year
Yes,
and a half
but we have now unlimited.
I know, it's QEP. All right, so you also are talking about regulation and how that has increased to the highest levels in this country as well, right?
Look, I was recently at the presentation and somebody told me natural gas is a game changer. This is the belief. That's why the U.S. market has outperformed just about any other market in the world.
The stock market.
The stock market,
has
yes.
outperformed because of natural gas and how cheap
Well,
it is?
the view is this. You invest in America. America is less bad than Europe. And Asia is, they acknowledge the growth rates in Asia, but they have underperformed the U.S. by and large, the Asian economy, certainly China and Japan. Now, one of the reasons is they say the U.S. will become energy self-sufficient in 5 or 7 years, and natural gas will lead to a huge competitive advantage for the U.S. Now, yesterday, I arrived at Kennedy. So we go through immigration. I waited 2.5 hours in front of immigration to get through. You think natural gas will change any of that? This is ridiculous. The problem is we have, not only in the U.S., also in Europe, bureaucracies that are far too big. My medicine for the U.S. is reduce government by minimum 50%. Minimum. And people will then come to me and say, are you crazy to advocate austerity?
Go ahead, say it to him.
But look.
I'm not going to say crazy. I'm going to ask, 50%. What is the impact of doing that now?
The impact would be immediately an improvement in the economy. Immediately.
An immediate
because
improvement
you
in
would
the economy.
immediately reduce regulation.
Government helps the economy, Andrew. It's great. The regulations are super.
From the government layoffs would be.
Believe me.
Look, you take all that money out of the system overnight, you have a problem.
You're taking it back into the private
You're a nice
sector.
person. You're young. I'm sure you never read Milton Friedman's book, Capitalism and Freedom.
Yes, I did, actually.
You did?
I did.
I recommend you read it once again, because it's very short to read, and it contains a lot of very interesting and valuable points against the intervention by government. In particular, he says there is no evidence whatsoever that increased government spending leads to actually an improvement in the economy.
Well, when you think about it, for the government to spend, it has to tax the private sector to get to the money that it needs to spend, right? I mean, it seems...
It takes the money in tax revenues away and hires people to bother you more.
But 50% overnight would be pretty severe just in terms of the jobs market and the people who would lose their jobs. Not arguing that there needs to be cuts across the board. Can it happen more gradually?
Yes, in 3 days. Yes, in
Not
3 days.
overnight.
One after the other. Believe me, the economy would recover right away. These
is that
people
50%
would go,
across
have to
the
go
board
and look for jobs.
for military, for everything, or is it just
across the board? Across the board.
We're at. I mean, there was a time not so long ago. I guess at the turn of the 20th century, in the 19th, we were at 8% of GDP. 8% government
that's
spending.
That's the point.
I know.
That's the point.
Now
and the economy, 1870 to 1920. Had very strong growth rates on a real per capita income.
And you were
gain.
right. We have a $1 trillion deficit for 4 years in a row now.
We had a period of deflation, but the standards of living increased dramatically. But look, we're here to talk about investments. I mean, the economy is one thing, the government is another story. What we're interested in is, are markets going to go up or down? And I believe we had this huge outperformance by the US. Now, 4 months ago, some European markets bottomed out. Greece, Italy, Spain, France, Portugal, they were 4 months ago at the 2009 lows or even lower. Since then, and actually I recommended at that time to buy, and I bought for the first time in my life European stocks, which I hate to do, but I did it simply because the valuations were low. Since then, Greece is up 65%. Now, I'm looking at Asia. In Asia, Thailand from the 2009 lows is up 250%. Other markets like the Philippines, Indonesia, Malaysia, Singapore are up by a similar amount. China was at 6,000 index in 2007. We're at 2,000. I think China and Japan could have a rebound here. If Greece could rebound by 65%, the greatest garbage can rebound by 65%. Believe me. I'm not now necessarily saying that Chinese economy is improving. On the contrary, it's worsening. But you understand, the asset allocators, they sit there. They see this market up and that market down, and suddenly money shifts.
How about here?
I think here we're going to go down, say, 20% from the recent top at 1470.
Why?
The technical position of the market is poor, and the corporate earnings are worsening. And I believe that if the statistics were precise, which they aren't, because if you measure GDP and then you have a price deflator, it depends how you calculate the price deflator to determine real GDP growth. I think there's hardly any growth. Now, I'm not debating that the housing industry is improving, but other industries are worsening.
So you would fight the Fed?
Well, let's put it this way. I think the Federal Reserve and fiscal policies, not just in the US, have rather been destabilizing than stabilizing. You see, the idea of Keynes at that time was you smoothen out the business cycle. You go up in the excursion of prosperity, so you have higher tax revenues, you create a surplus, and when the excursion into depression arrives, you release a little bit. So you smoothen out the business cycle. But monetary and fiscal policies in the US in the last 30 years have actually aggravated the ups and downs of economic swings and, of course, of financial markets. You have much more volatility.
Would you call, you saw Karl Lagerfeld called Hollande an idiot, and he got a lot of flack for it. Is idiot too strong a word for the French president? Or?
Well, I mean, I don't like to call people idiots because maybe we're all idiots that we're in the financial sector, so I don't know. But I think he's probably also kind of an academic. And
like a law professor?
Yeah, something like this.
Oh,
and I believe that his policies are misguided. But a French friend of mine, he says, Marc, each time the socialists come in, the stock market goes up.
That happens here sometimes too. Marc Faber, thank you very much.
Great to see you.
What are there? We got to go. What are the names of the four?
Of the
Rottweilers.
The Rottweilers. I call them all Boss or Mia, because Mia in Thai we have the Palaya Luang, that's the big wife, and the Mia Noi is the small wife. So I have Mias.
Thank you. It's great to have you in studio.
Marc, before you go, would you sell Europe now, or Greece particularly after it's up 65%?
Yes, I think I wouldn't buy it. But on a setback of, say, the market has rallied, say, 30 to 65% in these European markets I just mentioned. Now I expect a correction, but no new lows. I think you made 4 months ago a so-called secular low, like I believe 2009 in the US S&P 666. You're not going to revisit anytime soon, simply because if you throw money at the system, you support asset prices.
That's right.
Equally, I was in London the other day in Mayfair. The same here. Luxury properties, they're not going to collapse. They may go down 20%. But look, Sandy Weil, he bought West 15, his condo, for 43 million. In 2007, he sold it now for 88 million. And he called me up the other day and said, listen, you're always on CNBC. Tell Joe there is a condo for sale, 95 million. So if you want to bid, you're welcome.
You know what? If he gives me the mortgage.
Marc, thank you very much.
Thank you. It's my pleasure.